How will Bitcoin halving redefine the crypto market? Bitcoin halving, a highly anticipated event in the cryptocurrency world, is set to redefine the crypto market and potentially challenge gold investments as a long-term wealth storage solution. This event will bring about a significant change in the rate of supply increase for Bitcoin. Currently, the supply of Bitcoin increases at a rate of around 3.6% annually. However, with the upcoming Bitcoin halving, this rate will be halved, bringing it to less than 1% annually. This is a substantial decrease compared to the previous rate and also below the average supply growth rate of gold, which stands at around 1% per year. The principle that prices in a free market reflect the balance between supply and demand forms the foundation of this concept. Gold has long been considered a reliable store of value due to its scarcity and the relatively slow rate at which new gold is produced. However, the Bitcoin halving will mark the first time that the growth rate of Bitcoin supply falls below the rate of gold inflation. This shift has led industry experts to speculate that Bitcoin, often referred to as digital gold or open-source peer-to-peer money, will finally fulfill its intended purpose as a valuable store of wealth. This turning point has the potential to reshape the crypto market and challenge the dominance of gold as a long-term investment option. Bitcoin, the world's most popular cryptocurrency, is often seen as a stable and secure investment due to its limited supply. Unlike traditional forms of currency that can be printed in unlimited amounts, Bitcoin has a fixed maximum supply of 21 million coins. This means that once all 21 million Bitcoins have been mined, no more can be created. Currently, there are around 19.6 million Bitcoins that have been mined, leaving less than 7% remaining to be discovered. The process of mining Bitcoins involves solving complex mathematical problems that secure the network and validate transactions. Miners are rewarded with newly minted Bitcoins for their efforts. However, as time goes on, the rewards for mining are halved at approximately 4-year intervals. This means that the rate at which new Bitcoins are created will continue to slow down over time. By 2029 and 2033, the rewards for mining will be halved again, further reducing the rate of new Bitcoin production. Eventually, around the year 2140, the final Bitcoin will be mined, and the only incentive for miners will be transaction fees. Essentially, Bitcoin's supply growth will come to a complete stop, making it scarce and potentially highly valuable. It is important to note that this long-term strategy of limiting Bitcoin's supply is hard-coded into the software that powers it. This means that it is highly unlikely for the various stakeholders involved in Bitcoin, such as miners and investors, to come to an agreement and change these growth-limiting constraints. The scarcity of Bitcoin is what contributes to its comparison to gold. Like gold, Bitcoin is finite and cannot be easily reproduced. This scarcity can make it an attractive investment option for those looking to preserve their wealth and hedge against traditional forms of currency. Furthermore, if Bitcoin continues to gain widespread adoption as a digital substitute for gold or a store of value, its value could potentially skyrocket. As more people recognize its finite supply and stability, the demand for Bitcoin could increase significantly, driving up its price. In conclusion, Bitcoin's limited supply and the long-term strategy of decreasing rewards for mining contribute to its reputation as a stable and secure investment. With less than 7% of Bitcoins remaining to be mined, and the rate of new production slowing down, investors see potential in Bitcoin as a digital substitute for gold. While the future of Bitcoin is uncertain, its unique qualities make it an intriguing asset for those seeking financial stability and long-term growth. Additionally, the decentralized nature of Bitcoin and its underlying technology, blockchain, are seen as advantages over gold as a wealth storage solution. Blockchain technology ensures transparency, security, and immutability in transactions, making Bitcoin an attractive option for those seeking to store wealth in a digital and decentralized manner. While gold has a long history and established reputation as a safe haven investment, the emergence of Bitcoin as a viable alternative poses a challenge. The ability to transfer and store Bitcoin easily, the increasing acceptance by merchants and financial institutions, and the potential for significant price appreciation have all contributed to its growing popularity among investors. However, it is important to note that investing in Bitcoin does come with risks. The cryptocurrency market, and specifically Bitcoin, faces several challenges that may hinder its development. One of these challenges involves unanticipated technological advancements. As technology progresses at a rapid pace, new innovations could potentially disrupt the current cryptocurrency infrastructure. These technological leaps could either help improve the efficiency and security of the digital currency or render it obsolete. Another obstacle is the slow adoption of crypto-based businesses by consumers. Despite the growing interest in cryptocurrencies, many individuals are still skeptical or unaware of their benefits. This lack of consumer adoption poses a challenge to the widespread use and acceptance of digital currencies. Without widespread adoption, cryptocurrencies may struggle to gain traction and establish themselves as a viable alternative to traditional financial systems. Furthermore, legal and regulatory obstacles pose a significant threat to the cryptocurrency market. Governments and regulatory bodies around the world are grappling with how to regulate cryptocurrencies effectively. The lack of clear and consistent regulations creates uncertainty for businesses and investors, making it challenging for the market to mature and attract institutional participation. However, amidst these challenges, there is one aspect of Bitcoin that remains constant: the regular cycle of prearranged reductions in mining rewards. This mechanism, known as the halving, occurs approximately every 4 years and serves to control the supply of new Bitcoins entering the market. The halving could either lead to unwavering stability if the demand for Bitcoin remains strong, or potentially the collapse of the entire Bitcoin ecosystem if demand falters. In conclusion, while the challenges facing the cryptocurrency market, including unanticipated technological leaps, sluggish consumer adoption, and legal and regulatory obstacles, are significant, the regular halving events and Bitcoin's mining rewards bring both stability and uncertainty to the ecosystem. The future of cryptocurrencies hinges on overcoming these obstacles and finding solutions that drive widespread adoption, provide regulatory clarity, and embrace technological advancements. The crypto market is highly volatile, and the value of Bitcoin can fluctuate dramatically in a short period. Regulatory concerns, technological vulnerabilities, and potential competition from other cryptocurrencies are also factors that investors should consider. In conclusion, the upcoming Bitcoin halving event is expected to redefine the crypto market and potentially challenge gold investments as a long-term wealth storage solution. With the rate of supply increase for Bitcoin slowing down significantly and falling below the rate of gold inflation, Bitcoin is poised to fulfill its intended purpose as a valuable store of wealth. However, investing in Bitcoin comes with risks, and investors should carefully consider these factors before making any decisions. To know more, visit blockgeni.com. Please like, share, and subscribe.